Let's welcome on board Nilesh Kambli, the CFO at Star Health and Allied Insurance, joining in on the show right now. Nilesh, hi, good afternoon. Good to have you on ET now. Nilesh, your combined ratio has moved up a little for FY24. Where is it that you see this number going directionally?
I would like to mention that for Q3 2024, our combined ratio was 97.8%, which has improved drastically to 92.7%. And for the full year, it is 96.7%. We had some higher claims impact in the month of September and October, because of which the claims ratio was higher and which has an impact on the overall combined ratio. But we see that this is moving lower and we are confident of improving on this in the years to come.
Right. Hi, good afternoon, Nilesh. This is Cheryl, so joining in the conversation. Talking about your internal targets, have you set anything as such for FY25? What are the targets that you're aiming to achieve?
See, for 2023, we had achieved a combined ratio of 95.4%. For this year, as we spoke, we have achieved 96.7% and would better this combined ratio, which will give us an ROE of close to 20% on an IFRS basis. On a reported basis, we've always maintained that it will be an ROE of 16 to 18%.
Right. So let's shift focus then and let's talk about the growth in your agency's channel. If you could shed some light on how is the growth if you talk about the Bancassurance as well as the online channels in the quarter gone by for your company?
See, agency channel is our flagship channel with 82% share. For the current year, it has grown close to 18%. It will continue to do well, and we are taking a lot of initiatives when it comes to agency channel. Again, this growth of agency channel is by choice. We have decided to let go businesses in loss-making territories, certain portability business, and we are focusing more on the quality of the business. When it comes to banca and digital channel, we have grown close to 35% in this segment and will continue to grow faster. We're targeting more than 40-45% growth in this segment for the coming year. One more segment of growth is the GMC segment, which is a group medical segment, employer-employee in SME and MSME segment. That is one more focus area for us. We have been very, very cautious, but we see that the market rates are improving. And that is again a big driver of growth for us. So we are going to fire on all the cylinders and we have initiatives and strategies planned for each of the segments.
Right. So given that IRDAI also is coming up with the digital channel, how do you think it's going to benefit your product portfolio?
See, when it comes to IRDAI initiatives, what IRDAI is trying to do is, it is trying to penetrate market. Today only 4% of the Indian population has retail health insurance. The idea of IRDAI is to bring in affordability, accessibility, and availability of health insurance. It's a very good and big initiative which will help to expand the market. And Star Health as a leader with 33% market share it's going to benefit it in a very big way.
Right. So to add to that, IRDAI has also recently revoked the age limit for health products. How do you think this is going to impact your product line?
See, I would like to mention here is Star Health always had a very innovative product in terms of senior citizen red carpet plan, which was available up to 75% of age. So this initiative definitely will not impact Star Health. Having said that, the other things which IRDAI is likely to do, these are discussions in progress, but there is going to come some price benefit out of this initiative.
So Nilesh, are you anticipating that this move by the IRDAI will in fact go ahead and aid your volumes for the business going ahead by any chance?
No. See, all the initiatives are towards improving the health insurance penetration in the country. This will definitely increase volumes. Insurance is a business of large numbers. As more and more people come into the net of health insurance, we see that the profitability of the overall business improves. Today, when the volumes are less, it is anti-selection. Only the people who are claiming comes into the fold of health insurance. But as the market keeps on expanding, it will improve the profitability of the overall business as well.
Right. So you had a very healthy quarter gone by. When you talk about the profit growth, it's been approximately at around 37% or so. Are you expecting that to sustain such a momentum going ahead? Yeah.
So for the current year, we had a 37% improvement in PAT to 845 crores. We have an ROE of 14.4%. With the initiatives that we're taking in terms of growth in business, the profitability initiatives in terms of loss ratio control, cost optimization, we see that the combined ratio will continue to improve for us. With this, and along with the investment book rising by 15% in the current year, the investment yields have improved for us. Our exposure in ETF rates and has given us huge investment income benefits. We see that the profit growth will be similar in line with what we have done in the current year as well.
Okay, great to have you on the show. Thanks so much for taking the time out and speaking with us today, Nilesh. Good speaking with you.
If you like this video, then like, share and subscribe to ET Now.